All right, this is Jeff Scott, and we're going to go ahead and we're going to get started. This is a web video, not a live webinar. I will be doing a live webinar tomorrow morning at 9 a.m. If you are interested, tomorrow would be on Monday, I guess I should say that, which would be January 6th. You should have gotten an email from HGSI that I'll be doing that. It'll be a little different than this and basically show you how I attack the morning for my trades. Let's go ahead and close that and open up the PowerPoint and let's begin. So it is 4:43. I'd like to be done before 6. I've got a lot to cover. So basically, Santa did pay a visit to Wall Street, and we'll look at some of the data. And let's take a look at where we're going, where we've been, and some of the techniques that I use to drive my returns. Disclaimer, as usual, is for education purposes only. Anything I recommend in the spirit of education, not investment advice. I'm a doctor, not a broker. Those physicians lose money with their investments, and I am not affiliated with any software vendor or trading company. Tools demonstrated are those that I use in my daily trading. I have paid for all the tools that I will show you today. Just to remind everybody, and we're filling up, I've got 12 paid. I've got 3 or 4 that have committed to me. People I have relationships, so I expect that they'll actually will be coming, which means they've only got 4 or 5 spots left. February 15th and 16th, high growth stocks, how to find them, how to trade them. It will be using multiple different programs, HGSI, TradeStation, Thinkorswim, Magenta Trader, and a number of different websites, FinViz, BarChart, and others. And really it's about how to find them and how to trade them. George Lee will be the keynote speaker. I'll be helping him, and Chris White will make an appearance. I've got a couple of guests that have given me soft commitments, and they're more active traders, and I think they'd be great, but I want to get us to 20 before I commit to them. The fee has changed a little bit. It was $750. It's now $750 only if you want my TradeStation indicators, $500 without TradeStation indicators. If you're a couple, we'll do it for $850. I'll cover the cost of breakfast each day, snacks, refreshments, lunch. There'll be a meet and greet reception that's optional on Friday night. It'll be a time that we'll have a projector, a private dining area, again, covered by your registration fee. And George and I will do some of the basic intro and also try and get everybody up to stuff on the different scanning tools that we'll be using that we think everybody should have. If you are a Thinkorswim person, I will hopefully send out the code before the meeting so you can do the installation. We'll also do an installation video so you can see how to do that. And like I said, attendance is limited to 20 spots, and we're getting close, and there's my contact information. People have asked, is this the same as the PV meeting? Nope, it's designed to be complimentary. Perhaps a bit more practical, how to make the trade. The agenda, set up your tools, finding setups, how to trade. What we do at night to prepare, George and I, and then how we track our performance. I should have called it the Be Your Own Guru meeting because I think that's, again, goes back to something that Ian said to me in the early 90s. You need to be your own guru. You need to take charge of your own trading. You need to be responsible, solely responsible for how you do, but you got to get there. And I didn't become a physician just because my mother, well, I did because my mother wanted me to, but I had to go to school first. I had to do training. I had to learn the tools and get the education, and then I became my own, I became a doc and sort of ran it the way I wanted to run it. So I've relied on Ian and Ron, Woodward and Brown, Alexander Elder, Van Tharp, Bigelow, William O'Neill, Morales Catcher, and others that have helped me. Here's some of the websites that I've used that have helped me build out what I do. I purposely try to hide my desktop now because I have way too many programs. But I really need something to trade real time. Because of investments and indicators and strategies, it's probably going to be both TradeStation and Thinkorswim for some time. From an analysis perspective, it's HGSI, HedgeRater, Magenta Trader, and MarketSmith. So I've had these same thoughts. There's a lot of reasons to be bullish right now. We just had a Santa rally, which increases the chance that we'll have an up year. We had a just right improving picture of the economy. GDP beat forecast, unemployment plus or minus, consumer confidence seems to be rising. Indices had continued upwards March. They sold off a little bit on Thursday and Friday. High relative strength stocks still outperform. There was a budget deal, although it wasn't such a big deal. And I think the Fed threaded the needle on initiating taper without killing the market. Bearish things, you got to dig to find some. You had that Hindenburg omen about a month ago. Still something that's out there. The lack of a major correction eventually will catch up to us. The taper has started. Bullish sentiment is everywhere I go. It's too high. I haven't looked at the cover of Barron's yet, mostly because I didn't go to that slot on my iPhone. But I'm going to take a look at it right now. Just curious what it says, because typically that's another thing that might show horrible bullish market beaters. Who gets hurt by rising wages? 2014 estimates look too high. So, you know, you are getting to a point where one would expect the market to get tired. And then in yellow, interest rates creeping up. Now we have the, are they going to go above or not go above 3%? I think the answer is pretty simple. They're going above. And we are in a mid-term election year. I was going to put some pictures out, which I didn't have a chance to do. But in the Stock Market Almanac, which is just a fascinating document, in my opinion, they actually showed the May to October market swoon. And they showed that, as we've seen the last couple of years, it's really not as big a deal as we think, perhaps, except if you look at years of a midterm election. And folks, we're in the year of a midterm election. So I think I have to add that to another reason why I might expect market weakness at some point this year. Santa paid a visit to Wall Street. You could see, and the Santa Claus rally is sort of based off of the S&P 500. The Stock Market Almanac basically said it was a positive season. I looked at the numbers, and they didn't really do much at all. In fact, S&P 500 was up, but less than 1%. NASDAQ was down a bit. The Dow, those 30 stocks behaved the most. The Canaries, you know, those major stocks, Amazon, Facebook, Google, they're still doing well, but you see a lot of red at the end. And they're starting to sell down to a confluence of moving averages. And they may bounce here where the 8 and the 17 have come together, or we may be at risk of a pullback to the 50. So I'm going to watch them. If they bounce, that would make me feel good, at least about high-flying technology stocks. But if they continue to pull back, that's more concern about the market. The October LLURs, on the other hand, are still, you know, doing very well, like the indices. They were riding across the upper Bollinger Band, and they pulled back to the 8-day exponential. But I think you can agree that the LLURs, which are much more representative of the leaders in the market than just 5 or 6 stocks, the LLURs are hanging out better. Now, a couple of teasers of things that you'll see at our meeting and reasons why you need to follow my buddy George Lee. I think he made his entire income for the year on one trade last year in January. Now, I think George, you know, I know he had a great year trading because we talk frequently and we compare things and trade ideas. But I also remember his option play on Netflix. Why is Netflix, when you look at this chart here, is that a buy or a sell? And when I look at it, it's not real pretty. My momentum indicators, at least, have shown me evidence of a pullback as the daily bond goes red and the weekly is green. The forces have turned red. I've had a DI crossover, and it looks to me like it wants to pull back and maybe go visit its 50-day moving average. Now, that's potentially true, and that might happen, and that might set up a great opportunity. But if I look at seasonality of Netflix, what I see is here's the range trading that we've been in, and here's the correlation of the average seasonality over the last 10 years. And we do expect perhaps a small dip, maybe we're seeing that dip right now, in the beginning of January, and then it goes straight up. And in fact, between January 21st and February 17th, 9 out of 10 years up, average up year 23.6%. So to me, that's, sorry about that, that's pretty exciting. And, you know, do I want to be short Netflix coming into that seasonality? No. Do I want to be long? It's an expensive stock. But, you know, if you're going to get a 20% move and you got a stock that's over $300, 20% is $60, you could be buying some calls that are $10, $15 out of the money and rolling the dice. And I think that's the kind of things that George did last year, and Netflix just went crazy. It was not, this is not a one-year phenomenon. Growth rate, 90%, and it's a pretty big move coming in Netflix. So something to keep an eye on. Is Google a buy, sell, or hold? Well, again, Google's trading near a high. It's pulled back to the 8-day exponential moving average. The initial parts of red demonstrating a pullback. So that might be concerning for a pullback. If we look at seasonality, you see the opposite of Netflix. Now, it's not great. 6 out of 9 years it's down, 8.3% average. But I certainly would be a little bit nervous going long Google. And in fact, if I think this market's going to roll over in general, then I might look at Google as one of my favorites to start looking at buying puts and taking advantage of a pullback because seasonality would be in my favor. Don't miss the upcoming seminar in sunny Palos Verdes, March 29th through 31st. As you saw in George's newsletter, I'll be participating more officially. I'm looking forward to doing that. The website, for those that are new to us, highgrowthstock.com. On that website, you'll see a button that says free trial, and by free trial, it's truly free. You don't even have to give your credit card on that website, and you can see some of my prior videos to see where there are multiple videos by me, by Ron Brown, and others. I have a YouTube site. If you look up capital JAS Cancer Doc, you can get to a list, and I've got probably 2 years or more worth of training videos for HGSI and top-down investing. Again, just a shameless plug, and just I'll just point one thing out. This is not, means not being done to make money. If it was being done to make money, I'd have 40 people there or 50 people there and have a higher price. My intent was to break even, and the reason why they added the dinner to the registrants, not their wives, but to the registrants, is because you know, I got to the point where we're beyond breaking even, and so that was my commitment. And we've added breakfast, lunch, and the Friday night dinner. Hint: Friday night, Valentine's Day. So since we all have very understanding wives, if they're even letting us go to this meeting, my wife and I believe George's wife will host with individuals. You pay your own way, or your wives pay your own way, a dinner on on Valentine's Day for our wives while we're in a private dining room with slides and presentations. So parting message: your job is to become your own guru. Investing is a business. Make sure you have the right employees, which to me are tools and software. Continue your education and trade the market we have, not the one that I think or anybody else thinks you should have. So let's quickly jump into TradeStation so I can make my point. The indices all look the same, and what the indices look like is, and this is the S&P 500, broke out to new highs, pulled back the last 2 days, blue, blue, blue. I mean, you're free to do what you want here. It's not a sell signal. It's not a buy signal. We at least got positive on the MACD histogram in the line, but I thought we might break our negative divergence. We did not on the S&P 500. The NASDAQ, the same thing, blue, 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 and it probably, at least compared to the last peak, higher high and a higher high in the MACD divergence, MACD histogram and the lines. That made me feel better. I don't think it means anything. I think there's still a market that's at risk. And the Dow Industrials perhaps looking the best, which isn't surprising. They've done the best of the Santa Claus rally, but still blue as well. So, and here, not as high on the histogram as the prior, but these intermediate highs on the way up, we did make a higher high in the MACD. So perhaps a little bit of healing there, but a market that is still, I guess you could say, at risk as an understatement. Make sure there's nothing to embarrass anybody, me specifically. For those that are about tomorrow, 9 a.m., and you can find this on the HGSI site as well. Just to take a look so I don't feel stupid after I'm done saying one thing and the market's going the other way, but also to demonstrate that I'm not relying on any help here from the pre-market. Pre-market's basically flat at this point in time. All right, so now let's jump into a little bit of my review before I go into look forward. So we'll start with the end of week discussion. And so I use tools within HGSI and EdgeRater to give me an idea of how the market did, what's working, what's not working, and to get an idea if I want to be in or I want to be out. So the first thing I look at is black versus red. And we take out the things that were nothings. Black. And so the week was, the end of the week was challenging for a lot of folks. So we have a lot of red, probably have fairly close to same black. Then I look and I try and find things like the S&P 500. And here's the S&P 500. So if I bought the S&P 500 at close of the market on Friday after Christmas and sold it on Friday after New Year's, it was down 0.5%. So the S&P 500 over the last week was down 0.5%, flat. Then I want to find out how the HGS 100 and the IBD 50 are doing and how they compare. So they're better than the market, and then they're down 0.34 on the IBD 50 and about the same 0.37 on the HGS 100. So that tells me right away that the types of stocks that I'm often looking at on these meetings or on these calls are not leading and doing well. And in fact, the ones that I picked as potential buys perform just like the market. Now, interestingly, my portfolio had some other things in it. It's a bit of a mixed portfolio with longs and shorts. And I had a pretty darn good week, frankly, and it's up here somewhere. I was up 1.23%. Now, that's kind of interesting looking at that because I had more losers than winners. But let's see if I can find it. I had a couple of really good stocks last week, and just to point out who they were. Trina Solar was up 16%, YY 15, Hertz, a big holding amount, was up a little bit over 10, Sun Edison was up about 10, MPS was up 9, and I really had only one thing that was down bad, which was NOAA, which I got out of early in the week. So despite the fact it wasn't a great week for HGSI-related stocks, or at least short-term momentum stocks, it wasn't a bad week, and I'm sure all of yours were probably in between, probably above the S&P 500. What things were really working? Strong stocks last week. Those had a viable gap ups. On Friday, we're up 11.85%. Pentaplays would be a forced kahuna, pocket pivot, and viable gap up. Only one made that. It was up 8.68%. Some of my meta stock scans, like long bullish coiled spring, was up 3.33. Estimate leader, so good earnings, was up 1.35. So I guess not to beat a bear or beat this to a punch, it was a flat market for the most part. Growth stocks may be forming a little bit better. And what I thought was interesting is the kind of stocks I really like to play, which are high beta stocks. We're up 2.27. So that's probably why I did better than the S&P 500. Enough of me. I look at the Hindenburg looking for a signal. The last signals we had were 12.6 and 12.17. We're now 3 weeks out, although I think you have to go more than that, maybe 2 months to say all clear. And you could see we ended the week without any signal. And some of the exuberance in the new highs 10.9% S&P, excuse me, the NYSE at a new high on the 26th. Some of that exuberance has come off. And you could see, even though the new highs have dropped, there really are just a teeny-weeny number of new lows. So that's bullish. Bucketology, I like to look at how extended the market is as a whole by looking at a basket of S&P 1500 stocks. Both the Hindenburg analysis and the bucketology are done using EdgeRater, which really simplified my life for my analysis. So first thing is what percentage of stocks are above 0.5 in the percent B. If you think about percent B as the Bollinger Band, with the midline being at 50%, stocks in an uptrend typically bounce between the midline and the upper band, and a downtrend between the midline and the lower band. So 70% of the stocks are above the midline, which is bullish but not excessive. And what I could see is most of the stocks are the 70-75%, meaning halfway between the midline and the upper band, which is clearly not excessive. If I go back, this was on the 3rd, if I go back to the day before Christmas on the 24th, this is what bullish excessiveness or exuberance looks like, where 80% were above the midline. By itself, not a big story, but 22% of the stocks in the S&P 1500 were trading above their upper Bollinger Band. That told me that the market was going to pause, or might pause. It can get way more extended, but I don't put a lot of new buys on when I start to see that. The markets in EdgeRater, this is a neat tool where I'm going to look at green is good, red is bad, yellow is intermediate. And we're starting to see a few patches of yellow coming in. This is percent B. This shows an individual index. Are you above or below the midline? I think you're above, get in my mind, above 0.7, you're green. Below 0.4, you're red. In between 0.4 and 0.7, you will be yellow. Actually, between 0.5 and 0.7, you're yellow. All right, we get that. Between 0.4 and 0.7, you're yellow. That's correct. Above 0.7, you'll be green. So green is good because you're at the upper part of your Bollinger Bands. You could see that back around the 24th, almost all the indices were trading above their upper band. Percent B times bandwidth is a Woody special. And I'll let Ian be the one that's the guru on that, except to say green is good, and we're pretty much green here, so buy signal remains. Another thing that you can do with EdgeRater is you can run and look at some George Lee setups, which are amalgamation of things that he uses from David Elliott and others. And one thing I just wanted to point out, and we'll talk more about it, is UUP had a PSAR reversal, stop and reverse, and a mobile breakout, and a Keltner channel squeeze within a squeeze on Friday. And if UUP continues to go up, and you see dollar strength, that will have impact on commodities still and other things. Now, for a while, the dollar and the market were opposites. And when the market went up, the dollar was down. When the dollar was down, the market was up. I try to think back to other days, and I'm not sure that that's what we want to see. I think in a super strong market, although it might be tough on it'll be tough on commodities. But I think in a good, strong economy, a rising dollar may lift the market as well. And if the economy is really humming, then commodities will go up on that basis. So I'm still triggered to be nervous a little bit about the dollar, but maybe this time will be different. What about my year-end review? And I'm going to work on this some more. But the EdgeRater is just such a fantastic tool. So I used data based upon year-end 2012. And then I ran EdgeRater, and I learned about what was leading. So this is interesting because it doesn't look like much, but let me draw. If you look at this, and horrible drawing as you can see, it doesn't look like much, but between the low ERG to the near high ERG, that's a difference between 25% return and a 60% return. So the stocks in the 240 to 260 range, doubling the return on the market overall. Not a big shocker. The number of stocks that are in the super high ERG number are small, and sometimes the best performers are those in the 260 to 280 game, and above 280 they've already had their run. So that's one thing. Relative strength mattered. As you could see, the return certainly goes up with relative strength. There were a number of stocks, interestingly, that did well, very low relative strength. These would be perhaps biotech stocks that have no earnings and were down in the dumps, that had breakouts related to a drug approval. There was some junk off the bottom rallies where some of the lower relative strength stocks won. Group rank over the year almost never makes a difference because you have so much rotation throughout the year. Short term, I think group rank is really important. Interestingly, everybody did well this year. High earnings per share rank and no earnings per share rank were the leaders. Accumulating stocks back in the beginning of the year did well. And as I like to talk about, box 1, box 2, and box 7 stocks lead. So I guess the only thing that I see here that surprised me at all was this tail down here. So I'm going to do some more work to evaluate it. Now, this is really just a fascinating tool. And all I really need to do, or you would need to do, is so let's look at the last quarter performance. So I keep a lot of things. My wife would tell you I'm a bit of a pack rat, and I never throw anything out, and I think my computers would dictate that. But I just got a new notebook that's got 2 terabytes of an SSD. So I want to find one that I did sometime around beginning of October 1st. So let's just look at this one. So this is the end of September. So that means, so 29, so the next day was, I guess, 2 days later the quarter started. And I'm going to look at all securities from that date, and I want to look at, starting on that date, so I'm not cheating and using today's date, I'm using the data from September 29th. What worked and what didn't work in the market. So from October 1st to the end of the year, so that last quarter. Make sure I got all secure. I'm going to hit OK. Now I'm going to go to Excel and I'm going to run it. So I'm just curious what was working the last quarter, and did it look, of course, this is what's going to happen. All right, it'll work now, I bet. I mean, I used to do this analysis, and it would take me hours on a spreadsheet. So you could see over the last quarter that business around the high ERG reversed, and over the last quarter, high ERG stocks outperformed. Group rank in the last quarter, I don't know how to make about this over a quarter. Again, I think it's more of a short term. Relative strength mattered. The higher relative strength stocks outperformed the last quarter. EPS rank in the last quarter really didn't make a big difference. I talked a lot that I thought we were seeing junk off the bottom. It probably explains this peak a little bit, and perhaps it explains the E. Box 4 was the leader in the last quarter. So I'll use this from various times. But all this really does to me is it proves to me some of the things that I want to believe and I do believe, and that is that high growth stocks do well. They outperform the market. I see that in my portfolio. And, you know, I see that if I just bought, as we heard today on the website from a number of people, and let's do that real quickly as well. What if you just bought the high ERG stocks in the market on a given day? So let me see how far back I go here. Yes, I am a little bit anal for those people that are wondering when they see this. Had I just bought, I'm trying to think, well, let's just look at this. Let's do a group performance analysis on this date. So tools, group performance analysis, and I want everything. Had I bought, now obviously I didn't buy all this stuff on this date, and I certainly didn't plan on buying them and holding them throughout the year. Just out of curiosity, this was a very strange year in my mind, in that this was a year where you won by holding on to your winners, pinching your nose when they had minor sell-offs, and riding them for the entire year. Celgene, Gilead, Valiant, Jazz. I mean, there's a pretty big list, I think, of stocks that just did great on a buy and hold strategy. I don't for a minute believe that buy and hold is a long-term successful strategy, and it's not what I usually do, but I got to admit that this was a year that buy and hold was a great way to make a lot of money. I also know that this was not a great year if you were a trend trader. All right. So I'm looking at a lot of groups. It's going to take a few minutes, but and I'm going to look at, let me set this right way. So we're going to look at if we had bought any of these groups, and there's some chatter on the website about this stuff today, at the open on Tuesday, January 2nd, and we sold them on Tuesday at the close. And that's going to take a few minutes. And obviously, none of us would have done a buy and hold for a year in all these groups, but I think it'll give us a sense, and I haven't looked at this. I guess that old lawyer thing, never ask something unless you know the answer. I'm violating it right now. It will probably show us that there were a lot of ways to make money this year. Well, I can't open up the program. See if there's anything else I wanted to bring up. It's also a good time to reflect on how you did last year. Look at your diary, look at your winners and your losers. What could you have done better on your winners to get, to get more of the move? What could you have done better on your losers? I usually spend this time of the year rereading O'Neill's book and reading another book from Van Tharp, because what always gets me in trouble, frankly, is not stock picking. And it's probably not even looking at the market. What gets me into trouble is sometimes I think I'm too smart, and I let some small wins turn into bigger than I want. These small losers turn into big losers. So this is interesting. So I've looked at probably 40 different groups, and these are groups. These two are not groups. These are categories. These are groups that were picked through various lists that I use, and it shows that, my God, what a great year. The S&P 500 was up 29.60. Except for the top stock search, which had one stock that it gave a negative to, almost any group of stocks that you would have bought and held on the year, well, all would have performed well, and most of them would have outperformed the market. So some of the big winners, breakouts, 53%, 6 stocks. Bespoke puts out a list every once a week. If I bought their list for that week and just held it, I'd have 91% winners, up 51%. If I just held my own stocks the whole year, which I didn't do, but I did better than that, it would have been up 37.75%. If I bought the top 100 that met the $5 and $150,000 categories, that would have been 87 in Vector Best. That would have been up 36% for the year. If I bought the IBD 50 or the HGS 100 on January 1st and then went to sleep, we went up 44%. So all it says is that this was a phenomenal year for the types of stocks we did. So as you pat yourself on your back, and I pat myself on the back for a job well done, the wind was at our back. And when I think, I'm trying to remember what Ian says, wind's in your back, you just have to you go for it, and you make a lot of money. And when the wind's in your face, you got to worry about capital preservation and other things. Let's take a look at the market. Enough babbling. I like to babble. My wife will tell you that. So let's go right down to the Woodward & Brown user groups, major market indices, and top-down view. Ranked by raw combo, what do I see? Again, this is giving me the T combo is going to give me all technical, some 2 or 3 weeks, but mostly looking at the last 5 days and heaviest on the last day. Transport's leading, the Dow up there as well. Silver and gold actually were up for 5 days, up 2%. Is the bottom in? We'll look. We'll look at the dollar, which also was up near the top. What's at the bottom? Commodities, oil, gas. And last week, I think there were a ton of energy stocks as we ended the previous week. And this week, the energy stocks, they're not there in the groups. Do a very quick review. And I'm already looking with Elder, and it's going to be the same thing as we saw in TradeStation. And what we're going to see here over and over again is this is the S&P, as we've talked about it, little pullback, sort of oscillates all the way up this year. A great year for those people that were long since the beginning of the year. 50 was support most of the time. We have a couple of porosity issues that we broke through. And we pulled back a little bit the last couple of days from the upper Bollinger Band. That's the S&P 500. The Dow, same thing. Bullish, pulled back a little bit. NASDAQ, same thing, pulled back a little bit. If I look at the volatility index, continues to struggle to get above the 200-day moving average, and as long as it's moving between 11 and this 200-day moving average, I don't see a big change in the market. A breakout above this and being able to hold it on a retest would be worrisome for the bulls. I mentioned strength of the dollar. Dollar broke above the 50, broke above the Bollinger Band on Friday. And for those that like things like mobile breakouts from the squeeze, in fact, let me show you how I look at that. So we had a PSAR flip, and let me insert an analysis technique. And then you can see it squeezing down here as well. So I put the squeeze breakout, so mobile breakout and a squeeze in a single indicator. And it's going to pop up in here. Trust me, it's in there. I guess I got 2 indicators starting at the same time. So, but basically, you have a mobile breakout from a squeeze on Friday on the dollar, and that might be something that those of us who have been bullish for some time, we may want to keep our eyes out for that. All right, enough of that. Sure. What else can we look at here? We can look at gold and silver. We see that gold, yes, it's off the top, off the bottom. It had a kahuna. I can't say that I haven't been nibbling a little bit on a more of a day trading story on Nugget and Dust to play this, the 3X, but it's still in a downtrend. I'd like to see it stay above the 50 before I believe it. above the 200, I'd be really believing it. I think I am getting a lot of mixed signals on gold and silver, and right now they're in downtrend despite the up week. Silver looks the same, a little bit closer to the 50. Oil, been look at this of late, but oil sold off hard on Thursday and Friday with big kahunas and huge volume. There was a switching of the contract month recently as well, but oil, everything's turned red. Oil looks weak. I guess something that would make me even more concerned about oil was I was reading something that a Montana congressman was urging a slowdown in the extraction of oil because of supply, and that does not say good things about pricing power. All right, next thing I do is I go down quickly, yeah, right, Jeffrey, into industry groups, and we see there's 145, and I want to look at what's really moving now, so I look at force up, down to 34, that's a big drop-off. On the other hand, we're down to 3, which tells me not a lot of movement in the market, which we all know we just got out of the recent holiday time. What's leading? Diversified banks. So Bank of America looks great. It's one of my holdings. We've talked about this several times. Lots of earnings are coming into some of these stocks over the next couple of years. Perhaps there'll be earnings coming in and less federal regulation. One of the downside is they used to pay some reasonable dividends. They don't now. But a lot of growth opportunities. This is Bank of America. Certainly has had a great year. Used to be, if you look at a weekly, an expensive stock. And just recently broke above the 200. It's been on the monthly, I guess I'll go out to look at that. You'll see days of a $50, $60 stock that just got killed in the market collapse. So I like Bank of America. Citi looks very much the same. Pocket pivot, looks like probably had a mobile breakout as well on Friday, or wants to get close. And then JP Morgan, which is the big kahuna. All these are in uptrends. They all are subject to the whims of the Fed and the government and regulatory agencies, but they all seem to be moving in the right direction, and financials have been strong in other classes, as we'll see. Retail drugs has really been a story about Rite Aid. It had some great same-store numbers this past week. Not the best chain, and that's why it trades at a relatively small price, but it's got a lot of locations in good areas, and lower left, upper right, pulled back, broke above the 50. This might be setting up to resume its run. Small price stock, but with a kahuna and big volume on Friday. Next group down is airlines, and we've been bullish on these calls for how long? For probably the whole year. My big holding is Delta Airlines. And you can see Delta has been in a huge uptrend, doubled in the past year. Pulled back to the 50, gave us a buying opportunity, and then on Friday a pocket pivot, a kahuna. Didn't reach the criteria for a viable gap up, starting to turn green up there. Great money coming into it. You can pick your poison. Southwest has got great earnings per share growth. Looks like it's breaking out here. Extended, long run, but look at the earnings per share growth. Which ones do I look at? Spirit is one I'm big on. They should get a lot of the advantages of the gates opening up in LaGuardia and DC. And they know how to make money on everything you do, going sideways, a couple of pocket pivots and a kahuna. It wants to run. And Alaska Air was a big leader. It pulled back to the 50, gapped up on Friday. You see the group strength here, starting to turn green, a couple of kahunas. I think airlines remain an attractive place to be. And if oil sells off, that's one of the places that will win. I mentioned the financials more than just the big banks. Asset custody banks, number of different things here that showed up on my review. I'll look at a couple of them. Blackstone is a big holding of mine. I bought it when it was a heck of a lot cheaper. This is a stock that I think it's finally taken out its IPO price. That's how bad it's been for this stock, or it's getting close to its IPO. His IPO price was here. It did trade up to 39. These are publicly traded entities that manage money. They're not banks. They have a number of assets. They purchase them, they grow them, they sell them. These guys have spun off a number of big offerings of late and return capital to investors. And you can see it's now done a U-turn back to where it started. If you were smart and bought it down here at $3 or $4, I bought it up around here. It had dividend yields at the time of 12 and 14%, mostly because the stock was so cheap. It's getting expensive. The earnings per share growth looks like it's slowing down. It's a great stock, pays a 2.9% dividend, highly rated. State Street again, lower left, upper right. I think we're going to see this in the entire bunch of them as we go through. Now, BlackRock's an expensive stock, worming its way up. It's a $300 stock. I want to look here where to go. I got burnt on this guy. This is a Chinese asset manager that sold off this week. It's got good earnings growth going out. Bar chart's a little late on the second quarter, so this is what I'm going to look to see if it bounces back into a viable area. And the other one I like here is Wisdom Tree, who we all know has a series of ETFs, and the CEO is married to Maria Baltaroma. It's had a nice run here off the 200, off the 50, pulled back close to the 17. Got good earnings. I think it may want to run again. Computer hardware, can you say 3D printers? I'm fortunate. I bought into 3D systems about $50 ago, which doesn't seem like it was that long ago because it wasn't. It was a $40 stock back in March and April. I don't know how you buy these right now, except these are probably early on in their lifespan, and maybe they're going to get a whole lot more expensive. But whether you're looking at 3D systems or Stratasys, I'm not interested in HP. Here's Stratasys. They've had long, big runs. They're expensive. They've got earnings, but not mega earnings. They trade at giant multiples. This one's at 166. But I guess there's a lot of speculation about the long-term opportunity within 3D printing, as well as potential takeovers by companies like HP, Lenovo, IBM, etc. Supermicro Computer, don't know anything about them except nice lower left, upper right. Sold off here. I like, this is a pullback for me. I'm waiting for a signal to get in, a kahuna, a viable gap up, a pocket pivot. But when I looked on MarketSmith, they've got a lot of earnings coming into this stock. So if it keeps its multiple, even if it drops its multiple by 50%, the stock goes up based upon if it meets its earnings. Meeting its earnings probably the biggest determinant. Broadcasters have been strong for some time, and the one I liked is, well, it's three of them, 3 or 4. Sinclair is one whose earnings have stubbed, and you'll see it being a turnaround stock going the next year or two as its earnings are going to come up, which will move it into box 7. Shallow pullback here, a couple pocket pivots and a kahuna. Everything is green. I like Sinclair. I will own it sometime tomorrow, most likely, if the market behaves. EVC sold off hard. It too has some earnings coming in, expansion of earnings. You can see the strength in the group. Got above the 50 on a kahuna. That might be one to watch. Feng, which is a Chinese stock, not as attractive as the last couple, but broke above the 50, had a kahuna, and has, you can see the group strength there, and makes money. And even Cumulus Media was one that I liked, lower left, upper right. And it's expensive, but not really. If you look at the growth, the earnings that they're projected over the next couple of years, not expensive at all. You got a wolf pack there. You got a number of stocks in that group that look attractive. Biotech, not my usual biotechs. The big guys aren't there. You don't see Celgene, Gilead at the top. They sold off a little bit. Just an aside, I heard a lot of noise that some of the sell-off could have been people who had gains waiting to the new year from a tax perspective. I had some major gains this year, and I did the same thing. So it's not beyond belief that people wanted to delay taxes a little bit, that they sold their winners in the first couple of days, which frankly could continue for the next week and could cause some weakness as there's a lot of supply. Ariad, this is now a play on the drug being reintroduced after the FDA put it back in. I still think it ultimately goes back up to the $12 to $14 range. The company probably becomes in play, but it'll be subjected to a lot of news and prescription counts. But when doctors go out of their way to get a drug for a patient, when there are alternatives, that usually tells me that there's a reason that the drug's a leader, and it is. Cintas had some major issues, had a good couple of days with Kahuna and volume on Friday. Probably want to watch that. A break above the 200 with all this green. This might be something to start doing your investigations and your research. MPSP, unlike the others, actually makes money, has some great earnings per share growth, and you could see it starting to move up. Probably going to meet some resistance soon as it tries to get back to its October highs. Don't know anything about this guy. A word on these, most of these have no earnings. They have small numbers of items in their pipeline. We all want to find, the next motivation, not the motivation today by any means, but I want the motivation of 2 years ago. I want this. Okay, I want it to be in this stock and then take the big breakout. I want to find the PCYC, and I want it to be in it back here, okay, or back here. I'm a doc. I know a lot of these companies. I still don't know how to find them. To me, it's roll the dice. I have a handful of these little biotechs. Some of them work. Some of them don't work. I know that going in. I use speculative money on them. Every once in a while, something will have a good study come out, and the stock will pop. Problem is, you're the last person. I'm the last person to hear it. There are some out there like MNKD. I've talked about this before. They've got a new diabetes drug that's due to be evaluated by the FDA. We'll find out about it sometime this year. It's setting up the squeeze. Good news, you know which way it's going. It's going back up to 12 bucks. Bad news, it's going back down to $1.50. These are speculative plays, and you do them at your own risk. However, to have some of these, a couple of these in your portfolio, there's the Mankind, I think you should. A lot of people were trading and making money on Celdex this year. They've got a number of oncology drugs in their portfolio. Not a cheap stock, but you want to capture one of these 50% returns on some news. So not necessarily long-term, well, maybe they are long-term investments. They're not my typical makes money, high-earned stocks, but having some of these small biotechs isn't bad. Building products. Home building, on my chart review, very few home builders actually made it to my top 600 charts that I looked at today. Yet a lot of the ones that make the products underneath did. And so we might want to pay attention to some of these. USG has got some huge earnings coming in. I think they've settled some of their legal issues. Are they breaking out to a new recent high? Look at the earnings per share, a couple of pocket pivots. I'd like to see it have some, actually show a trend, and we're going to have some overhead resistance here. But it looks to me like US Gypsum wants to join the party, and home builders, here's a weekly rounded bottom. You see the earnings per share growth. Masco, great earnings per share growth. Kind of the same sideways pattern. No reason to say it's not going to just jump back into the sideways pattern. This guy's taken out its previous high in the past year. PGT, do a lot of the paint, some of the chemicals in the house. Sideways, broke out, mobile breakout on Friday with the Kahuna, tons of volume, everything is green. Earnings don't look so hot here on an annual basis, it's still growing. Armstrong Worldwide, plastic products to make some flooring and cabinets. These all, there is clearly a Wolfpack here as well. Several of these look good. Now, I've always thought Apogee Enterprises made video games because I could have sworn that something I played in the 80s came from Apogee, but this actually makes building equipment as well. And it's had a nice run off that 200, pulling back here. I'm going to look for this one to give me an evidence to get in, whether it's a pocket pivot, a kahuna, a big bullish candlestick, a Bible gap up, and it's on my watch list. The reason for top down is to find when these things start to run together. Apparel, there's probably a couple of nice things in here. Gap, I'm out of, but I think I want to get back into Gap. It had pulled back here. Interestingly, this bottom is higher than the prior bottom. And in fact, if you start to play games with trend lines, not that I'm good at this, I think we're starting to move up. And group strength is here. Not much in the way of earnings. This is going to be judged upon how well it does on beating same-store sales. And I've heard good things from people about Gap in the holiday season. Ascena, the Red Barn, and other low-cost shopping, breaking out to recent highs, make some money. It's on the list. Coors is a more upscale retailer going sideways in here. Squeezing, could break either way. Best earnings per share growth, although slowing down. So you might want to be looking at some of the retailers. Number 10, healthcare facilities. Obamacare is here. Anybody that does better on volume probably wins because you'll have more paying customers. Hospitals and healthcare facilities probably win. Drug distributors like McKesson, Amerisource, and Cardinal probably win. Pharma wins until we see what kind of pressure is put on cost controls. Medical device makers, plus or minus, they've got a tax to pay. A couple of these looked interesting. I especially liked HMA. Don't know anything about the stock fundamentally, except this is a squeeze of all squeezes. Everything is green here. It's got earnings per share growth. It's a turnaround stock from losing earnings to now turn around making money. If I go into my little freight station, put my HMA, actually, it had a Bible gap up here. It's not broken below, it's been a little bit below that point since. Basing for quite some time, it's got a PSAR reversal, clearly squeezing. I think the stock wants to break out. So HMA is one that I'm going to be watching. Now, I'm also going to do my diligence and make sure that there's not a funny buyout or something explaining this tightness in this pattern, but it's got a volatility squeeze like I haven't seen in a long time, and it looks like it started to break above on Friday. So you might want to look at that group as well. I usually like to look at the top 10, and then we'll see what's on the downside. Trucking, more banking. REITs started to show up this week, which I thought was interesting considering the fact that interest rates are going up, not down. And let's look at force down. Internet retailers, these are a lot of my, my canaries were down. Amazon, Dang, Yelp, having a tough week. Casinos and gaming, I think it's a mixed bag. Look at the percentage down for the day. Most of them were up for the week. These are being driven by negative and pretty good volume. I don't see much to get excited here to the downside. I still love MTEL, which is a big holding of mine. Big presence in the Macau, which is what's driving all the gaming. And you could see how this stock has just had a huge run in the last 2 years or 18 months. It's been a nice run to be on. All right, so enough for top down. Let's go into all securities. Let's go into my favorite, which is HGSI Strategies, Woodward and Brown Top-Down Investing, Archive, Reference, Miscellaneous. printers, and let's take a look at the top 10 or 15 of these and then say goodnight. This is a quick way of having the best of the best come to the top, and you're going to find that we've seen some of these in our top-down review. U-Haul. All right, so it must be in the trucking industry. Rental leasing of trucks. We saw trucking was like number 13 or 14. Big kahuna here off the 50 is a big bullish day in a run. Not overextended, but it's a very expensive stock, probably not a big float, almost certainly not a big float. 32,000 shares a day, I'm not buying that one. Southwest, we looked at it, breaking out good earnings per share growth. Spirit, looked at that, breaking out of volatility bands there. Here's one that I talked about last week, which was a great buy, and it continues to be exciting. And the other thing I liked about Eris is seasonality is its friend too. Well, do this the right way. MagentaTrader.com, who is right now it's the, I hit the wrong one, my bad, is the seasonality software that I use the majority of time now. They do a bunch of free webinars on Sunday night at 9 o'clock. Just go to MagentaTrader.com, and they usually have some notices of that. Look at ARRS. Is this not a bullish time of year for ARRS? Look at the next 30 days. So when I look at seasonality, I want a big target area green, which means I've got a prolonged period of an uptrend. I'd rather buy it down here, and I'm already in it. This is my friend. It's no guarantee, although in the last 10 years it's been right 60% of the time with an average return of 13.6. The biggest return being 41.6. So it is a potential seasonal play here. It's certainly behind my back, and you can actually scan for seasonal plays with a Magenta Trader. So I like this a lot. Had a big big day on Friday in a tough tape and great earnings per share growth. Horizon Pharma, I don't get this one, but this is another one of these small pharmas that must have a story. Pain drugs. This continues to move up without making any money. I bet Dr. Ghilardi knows all about these guys and probably works for them because he works for most of the big companies. So pattern-wise, runs up from, it's had a double in 4 months. It's a little bit overheated. That might be early. Hertz Global breaking out like U-Haul. Had a shooting star on Friday, which I don't like. Earnings per share growth I don't like. There's some activist issues going on. They're spinning off some of their equipment leasing. We'll see if that helps. MS Communications, don't know these guys, don't make money. Love the pattern, breaking up here off of a nice base with a couple of kahunas, all green. Probably worth taking a look at that. Ambarella's been a darling of the market right now. It's a little bit extended. Looking at the earnings per share slowing down going forward, everything is green. Clearly been a leader. Cree, the LED maker, got all the major moving averages converging, so we'll see. You got a squeeze in play here. We'll break above or below. I guess earnings per share usually drives this stock. You get my point. You can just go into a simple analysis and look at more of a bottoms-up approach. There's 3D. What else do I like to do? I guess let's just finish with a quick group inclusion filter and then say goodnight until we say good morning. So tools, group inclusion report. Going to smart groups. Again, the philosophy here is these are pre-planned, pre-done scans for you on a weekly basis. They represent what they say. Best criteria, best of Woodward & Brown, best stocks under 15, demand, ERG 240, high ERG, growth, HGS 100 leaders, accelerating earnings per share, stocks and groups moving to the upside, strong EPS, relative strength near 52-week high. I can spruce them up with a few things like viable gap ups and pocket pivots. So these are all extremely bullish groups. And so the hypothesis is that these are really good groups. Aren't the stocks that are in multiple groups, shouldn't they be the best of the best? So let's take a quick look. So we check this off, and we'll just call it this. And so first thing it's going to do is going to open up a HTML. So these are the stocks. Oh my goodness gracious. We've looked at every one of these. Spirit, Airlines, PGT, house building goods. Wisdom Financial, Harris, we just looked at it in the electronic components. Ambarella, networking. Fang, this is a media stock, Chinese media stock. Inventance, sometimes you let the good ones get away. X1 is a 3D printer. So let's look at the last couple, and I'll make my comment. I held Inventance for a long time, and I sold it last week. And of course, it took off. Let's look at Inventance and Ubiquity, and we'll say goodnight. Because isn't it neat how you have a convergence where top-down stocks were the same stocks that we saw in the group inclusion filter? Validation. So Inventance, it gapped up here. I took it off the table, which I probably shouldn't have done, but I've been holding this for a long time. I didn't like the earnings per share. This was back to even, so I was happy. You could see it's getting back to its all-time high range. I was pissed at myself that I didn't take it off here. And of course, what happens, it had a big day the next day, and we'll see if it goes anywhere. So Inventance seems to be popping. I just don't like the earnings per share, and it's been a tough one for me over the years. And then Ubiquity Networks is another networking play. Good earnings coming in, uptrend, pocket pivot, everything turning green, not overly extended. You might want to look at that. On that note, remind everybody we'll see you tomorrow morning at 9 o'clock. Tomorrow I'm going to take some of these lists and show you how I use TradeStation, Thinkorswim, and some other tools to figure out what I'm going to buy, if I'm going to buy, and look at the market open. You all have a great night, and thanks as always for coming and listening to me ramble. Rambling Rhett, but not from Georgia Tech. Good night, everybody.